before we begin this interview, could you please like and smash the subscribe button below? It's my pleasure to introduce Emmanuel. How are you, Emmanuel?
Hi, I'm good, thank you. How you doing?
I'm doing great, fantastic. So let's get started with your background and how you got into trading.
I got into trading, funny enough, while I was still in school. So I started quite early. I was 16, 17 at the time. And I was just going online, playing online as you do. And then I think I saw an ad at the time for a trader, to become a trader. And some guy that I was following at the time on Instagram was teaching how to trade. So I thought, okay, let me get started in this or dabble into this. Long story short, I was with him for about 2 weeks before I left because I wasn't really satisfied with the teaching that he was teaching me at that point. So then from that point, I just literally studied for years later, practicing demo accounts, real accounts, loan accounts, practice back to the drawing board, etc., until about 4 or 5 years later, where it just clicked and I found my strategy that works for me and the style that I like to work with as well.
Oh, fantastic. What was one of your biggest challenges as a trader leading up to those 5 years and also ongoing now? How did you actually overcome those challenges?
Sure. I think the biggest challenge at the time was psychology. I think learning how to trade, I don't think is that hard if you put the work in, but I think psychology is the biggest factor which determines the successful, consistent as well traders from the rest. I think once I've learned how to control my emotions and psychology of trading, and effectively what trading actually is, it's a psychological game because you're dealing with people at the end of the day. Traders, you're dealing with other people across the world trading and stuff. So once I sorted that out, then from there it was pretty easy on.
100%. Once you sort, definitely. Just to rephrase, once you cover that bit, trading just becomes just a walk in the park, you know? So how does your actual daily routine look like outside of trading?
Okay.
And also trading generally. You know, what's your daily routine? As in, you wake up, I don't know, gym, trading, or whatever you do outside of trading?
Yeah, sure. So I just recently went full-time to trading, but prior to that, I was working. I had a 9 to 5. So I was working in private equity at the time. So my day consisted of 7 a.m. waking up, and then obviously I'd go start work anyway by 8:30. So I'll open my laptop and start work. And then trading really was fitting in between work as well. Luckily, I'm a swing trader, so it doesn't require me to be at my desk or looking at the screen 24/7. So I think that's what really made it work, working a 9 to 5 and trading, because I only had to look at the charts maximum about 30 minutes to an hour each day. So I'll do that in between my work schedule of 9 to 5. So that was that prior. But now, obviously, as I'm doing it full time, my day will normally consist of getting up at 7 in the morning. I'd go to the gym and I'd finish that about 9, get back, shower, and then probably open my laptop for the first time during the day around 10 a.m., something like that. And again, because of the way I trade and my strategy, I am a swing trader, so I'm normally looking for high quality setups with a good risk to reward ratio. And at the time, if I don't see anything that fits into my strategy, I literally just go ahead with my day. I'm involved with other things outside of trading, so a couple of businesses as well that I run during the day. If there is a setup that fits my strategy and everything that I have for my checklist, then I'll just place my take profit target and then just leave it, and then again until the next day, and then it's literally that every day.
Oh, fantastic. So walk me through your strategy. How would you define a high probability trade? Let me just share the screen.
So this is currently a position I'm in now, actually, but anyway. So what would happen generally, I look for areas of resistance and support or key zones in the market. And I look to get in from there when I see some positive momentum creeping in. So for instance, a trade that I put on so this is the Aussie Swiss. So for instance, what I'll do, it sounds very simplified, but we take it back to here. So an example would be I'll identify obviously key trend lines in the market. So I don't use any indicators, by the way, rarely anyway. And so for instance, when I see something like this happen over here, with I can see positive momentum creeping up, and if it's touched the third bounce of the trend line, that's when I'll typically enter in. I'll enter in here, stops just below there, and I'll ride it up and obviously just manage the position as it goes along. So that would be something that I will do, and I don't keep my stop close, so I give it room to play out. So this particular strategy you saw just there seems very simplified, but again, it works. I think if I show my, one second, my journal really quickly. So my journal.
Sorry to disturb you there, but this is the thing with having simplified strategies. You have a simple psychology. Many traders get into this and they overcomplicate their strategy with too many variables of one entry, too many indicators, and it's just a mess for the psychology. So I definitely agree, the more simplified it is, the easier it becomes for your psychology. So yeah.
Exactly. And so if you can see my journal right here, again, another simple trade, I'll date it, again, stuff like this, befores and afters, exactly what I just showed you. So, and this would be about a 200, 300 pip move. And again, catching 200, 300 pips consistently, it just ends up to being a profitable trader. Obviously, psychology is a big part in it, but once you've back tested, once you know that your strategy works, then the rest is just about following the plan.
100%. Let's go through your actual trading statement and your equity curve. So let me just share my screen. Okay, so this is your statement right now. So congratulations, Emmanuel. You've become a funded trader, portfolio manager. Let's look at your actual equity curve. So if you walk me through the first 30 trades must have been a little bit tricky for your psychology. In the beginning, it was almost break even after 8 trades, but you showed risk management and consistency, but your equity curve was slowly creeping down. Walk me through your psychology before this complete U-turn and consistency to the upside.
Yeah, sure. As you could tell, in the beginning, it was, again, the equity curve was decreasing a bit slightly over time. However, it was just, I think the main thing with my psychology is that because I've back tested, there's going to be months or trades where you're going to have some losing trades. I mean, that is part of the game. I think one thing that really helps, if anyone, because I've got businesses and stuff and I worked in private equity and I'm very finance orientated, if one advice I'll give to people, if you just imagine a business, every business generates revenue, but they also automatically has to generate costs. So you would have a revenue, you would have cost of sales, you would have cost of doing business. It is fundamental. You can't run away from it. If you have a business, you're going to incur cost. It's the same way with your trading business. If you take it seriously, at points, there's going to be times of drawdown. However, if you don't, because I'm so used to it at this point, and I know it's just part of the game, it doesn't affect me. It's like running a business and having to pay your staff or something. It's something you just have to do. So at that point, I didn't change anything. I just followed my risk management, followed my strategy, and I knew that at some point it's just going to obviously start to make profit. And that's literally all I did. Just wait it out, keep taking the same trades, don't change anything. I think some people fall into the trap of, they go into a drawdown and they start changing their strategy and stuff. If you've back tested it and you know it works, do not change anything. Even if you've had 10 losing trades in a row, just keep, because you have to give it time for the probability to play out. So I think that'll be my advice there.
100%. Definitely agree with that. Can you walk me through the equity curve towards the end? So I can see it made a new high, but then it slowly declined. Walk me through the very ending of your challenge.
As you can see, in the beginning of my challenge, I did experience a bit of a drawdown. But I think for me, the important thing about trading is just to believe in your strategy, especially if you've back tested it. So during that first 30 days or 30 trades or so, because I'm so confident in my strategy and I've back tested it, I just kept doing the same thing. And I know eventually the probability will fall into my favor, and I'll start winning some trades, which is exactly what happened until I reached the profitable amount and then passed the challenge.
Definitely. If you agree with your strategy and you believe in it, that's all you need. Many traders, they've got doubts with the strategy. Even if they're profitable, they could easily towards the end just lose track, So if you've got that consistency and belief in it, especially if you've backtested it, it's a no-brainer. So let's go over your trading statement. So I went over your trades and I could see, you're a lot, I can tell these are break evens, small losses, but walk me through these big winners here. $100, that's like almost around 1% of the account. $120, $100 there. Those two big ones I saw earlier, here we go, these two here, almost $300 and $200. Walk me through these trades.
With me, as I mentioned previously, I'm a swing trader, so I like to catch the big moves. So my strategy is more waiting, but when I do enter positions, I'm entering it to catch the big swings in the market. So that's the 100 pips, 200 pips, sometimes even 300 pips. With those big winners, that's what I do catch from time to time. I mean, that's just part of my strategy. So I just aim to catch the big moves in the market and literally manage the position as the trade develops. So I think that would be the reasoning for the big positions. And then in the rest of the small position would be me getting into position, aiming to catch the big moves. But again, this is trading. Sometimes it doesn't fulfill to target, but then that's why risk management is imperative. So I would scale in or scale my stops as the position is moved on, and then it'll hit it sometimes. And then that will be the reason for the smaller wins, like the $50, the $30, etc., etc.
Absolutely. I mean, you're following risk management, you've got decent risk reward and a concrete strategy. So, no wonder you're profitable. So I was also looking at your stats, and you've got a 54% strike rate. Your winners are bigger than your losses. Walk me through the stats and how you overcame this.
So my strategy is about 50 to 60% win rate, strike rate. And again, that's all I need to be profitable in my case. Again, there will be some losers, which is part of the game, because if I'm profitable 60% of the time, there's going to be 40% where you handle loss. But again, that's why I say risk management is very, very important. Again, like from my stats over there, you can see, so in this instance, it was 45% losing trades. But again, as long as you're managing those positions, as long as you get out of the losing trades quicker and hold on to the winning trades longer, then I'm sure like anyone will be profitable in that instance. So that's the case.
100%. I mean, even your consecutive wins and your consecutive losses is way, your average consecutive losses was what, $122 compared to $557. So that's a very, very big difference there.
Yeah. I'm even surprised looking at. This is the first time I've actually looked at the stats for this account, but
it's actually very, very impressive. 100%. Now, before we wrap the meeting up, have you got any advice for any future traders that would like to join CTI, or how they could overcome any challenges?
Yeah, sure. I mean, CTI is a great company to join. So far, every person that I've met so far has really know what they're doing, and it's a good company to work with, a platform to work with. I think for my advice for future traders would be, take your time. I mean, it's not a sprint, it's a marathon. I think you need to take this seriously. If you feel like you want to take trading serious, you need to come with the right mindset. So you need to look at the long-term play rather than the short-term play. I think it's not in your best interest to come in and want to pass a challenge in 1 week or 2 weeks. I mean, you want to look for consistency. You want to be in the game for a long time. So I'd say just take your time, be patient. I'd say it's very important to backtest your strategy before coming onto live funded accounts, because if you backtest your strategy, it works, then all you need to do is just implement that, be patient, implement that, and then you'll get funded. So yeah, that'll be my advice.
Well, really, really appreciate your time, Emmanuel.
Thank you for the opportunity.
That's it. It's a wrap.